Long ago, humans traded directly. Grain for spears, goods for goods. Simple, but limited. But what if they didn't want what you had? This friction made trading difficult. Society adapted. We started using common items of value, like salt and shells, as money. The problem: commodities are fragile. A rainstorm could literally wash your wealth away into the mud. We needed something durable and rare. We needed gold. It was the perfect store of value. To standardize trade, ancient empires began melting precious metals, pouring them into uniform stone molds. Stamped with a king's face, coins brought standard weight, trust, and ultimate authority to money. With trusted coins, global trade exploded, fueling massive merchant caravans all across the Silk Road. But massive wealth meant a new problem. Merchants had to move thousands of heavy, dangerous pounds. The Chinese solved this. They replaced heavy metals with lightweight, officially stamped paper notes. In Europe, goldsmiths stored heavy coins in secure vaults, handing out paper receipts in exchange. Soon, they realized they could safely lend out more paper receipts than actual gold on hand. This was fractional reserve banking. It created credit, allowing merchants to buy massive ships instantly. But if everyone demanded their gold at once, the system completely collapsed into financial panic. To restore trust and order, massive central banks were established to strictly regulate the paper money. To fund massive global voyages, early investors pooled their money together into joint stock companies. The first stock markets were born. Paper shares were aggressively traded for future company profits. This unlocked compound growth. A single invested coin could multiply into a mechanical money tree. The 1920s brought a roaring market. Ticker tapes spun endlessly as massive fortunes were made overnight. But markets are volatile. Sudden crashes wiped out profits, proving the brutal risks of investing. In 1971, the dollar was detached from gold entirely. Money became backed only by human trust. Then came the plastic boom. Swiping a credit card created digital currency completely out of nowhere. Today algorithms trade millions in milliseconds. Our wealth is just flashing data on a computer screen. Enter decentralization. Bitcoin broke the traditional chains, offering a financial system without central banks. Ultimately, the evolution of money is simply about buying back your most valuable asset, your time. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.